Hey guys and girls, welcome to this week's episode of the No BS for Birchy podcast. I'm your host, Nathan Birch. It's a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today, I'm going to be talking about the mistakes that people make when buying properties and building wealth and trying to get ahead. It hasn't been an easy journey, right? Someone pointed out to me the other day, it's been nearly 23 years since I bought my first property. So, 2/3 of my life is almost me owning property and being a property investor now, which is kind of interesting. But holding a portfolio of over 350 properties, buying over 20,000 investment properties for other people, flipping properties along the way as well on that journey, you tend to see, and learn a few things, hopefully, over 23 years. And, where are the mistakes that people make? What things can people, avoid making the mistakes? They say, if you learn from your mistakes, great, right? But if you can learn from other people's mistakes, even better. So, there's lots of knowledge out there. There's lots of people with a microphone and camera and putting social media posts out there. Research, work with what vibes. If you find a bit of gold or a nugget from somewhere, just add it into your knowledge base and grow from that. So I guess, there's lots of areas to cover on this, and I've got to condense them down into, a 30-minute episode of podcast. But I guess the first one is being emotional, right? Emotion stuffs everything, right? Be logical. Treat your investing like a business. Have a plan in place, have goals, have KPIs for yourself, for each property, for everyone on your team to make sure that they're achieving the things that you need them to do, whether it be from a finance perspective, a management perspective, from the property perspective, from a tradie perspective. You want to make sure, you're across everything in your portfolio. And it takes a lot to learn that along the way. And there's expensive lessons sometimes on that journey. But treating your investing like a business is the most crucial part of it. And if you treated a business without a business plan, that business would most likely fail. So you want to have a business plan for your goals and for your investing, and leave all the emotion at the door, because a lot of things are opinions, noise, other people's perceptions, and can be very different to reality. And I guess it takes me into the first one, right? Everyone's got a circle around them, right? You've got your mum, your dad, your brother, your sister, your uncle, your auntie, your colleague, your friend, your spouse, whoever it is that might be around you. And they have different thoughts, beliefs, knowledge based on all the experiences they've had, right? And, everyone's trying to give you the advice. You should do this, you shouldn't do that. If I listen to all the advice, I still occasionally get people, specifically mainly in family or that, where people try to give me advice. It's like, hey, I've got my shit sorted, right? I don't need to take that advice. But it's interesting, right? People always have their opinion, and not always do they have their shit together themselves. So looking at it, I made a rule. I remember, at some point in my journey, someone said, what you should be doing is you should sell off your properties in Mount Druitt. For those of you that don't know, I started buying properties in Mount Druitt back in the day for like 150 grand a house or whatever. And someone said to me, those properties are no good. They're never going to go up. You should go buy yourself sell off your 3 properties, go buy a studio unit on the Northern Beaches. And I sat there and I was like, okay, well, you're not doing well financially. Secondly, how does that help me in any capacity? Third, why should I sell the properties? What's wrong with those properties anyway? And I realized at that point that if I took that advice, I'll end up to where that person is, and that's not someone I aspired to be from that perspective. So, be very cautious of who's giving you the advice. If they've got what you want, there's confidence there. If they don't, then you got to be questioning that. And you go to the personal trainer that's like big and fat, and it's like, okay, cool, I'm going to work out to be like this, or am I going to go to the you've seen Michael, my PT, right? He's got arms bigger than my head, and I've got a big head, right? You need to make sure you're getting the advice from the right people. So on that front, opinions come. A lot of the first opinion I see where people get it really fucking wrong is they go, I should buy a house, a unit's no good, right? If I could calculate, I say that I've bought over 20,000 properties for people. I didn't just go and negotiate a deal, secure the deal, and then someone magically buys it. I've lost out on, hundreds of thousands of properties that, I've negotiated on and deals didn't go through. And I always get upset when I lose a deal because I'm like, shit, that's, I'm looking at a deal and it's got 50 grand equity in it, or it's got positive cash flow, 5 grand a year or 10 grand a year or whatever. So I sit there and think, when I get that deal, it needs to be tailored specifically for either myself or for one of my investors, whoever I'm buying for. And is it going to be ticking all those boxes? And quite a lot of the time where I see investors get it wrong, they don't have a strategy, they don't have a plan, they don't have a roadmap or an understanding of what they need. So they just go based on their emotions, and they get caught up in the mindset that only the land goes up because some uncle or auntie or parent or someone's been burnt from buying some off the plan brand new property in the past, and they think, well, units are bad, and then they say, well, houses only go up. Well, if that's the case, I go down any street across the country, find me a street, and go down and say that the house is selling for $1 million and the unit's selling for 700 grand, and the units never go up in value. So that means that 10 years ago, when the house was selling for 500 grand, the unit was selling for 700 grand more than the house. It doesn't make sense, right? I think if you haven't figured it out in 2026, it's going to be very hard for you to figure it out. You could be new, but if you've been with this opinion for a very long time, it's going to be hard, right? That it's inflation, right? A block of land's a block of land, right? But when you've got a house or a unit or whatever dwelling is going to be built on the property, you now have, let's say the house cost or the unit cost or apartment, whatever, might cost 20 weeks to build, just hypothetically, right? And over 20 weeks, you're going to have 50 people, right? I'm going to be politically correct here. I was going to say 50 dudes building a house, right? But people are like, oh, chicks can be a painter or what as well, right? So 50 people on that site for a period of 2 weeks or 3 weeks at a time, and let's say they get paid $2 grand, $3 grand a week for being on that site. So that means that just in basic labor, is going to cost X amount of dollars to build the property. So to build whatever dwelling you've got labor costs, you've got bricks, you've got cement, you've got the steel that goes in the concrete, you've got timber, you got copper pipes, you got copper and electrical cables. You go and sit there and go, okay, how much does the copper price cost? Right? What's happening to that? And if you take a step back, everything's getting inflated away. And what we're seeing now in 2026 is it's the actual building that's going up faster than what the land can go up as well. So once you realize that it's a bank's game and it's based on how much liquidity is in the market and markets move in certain ways, and I'm not going to go into too much detail on that, you'll start seeing a pattern, be like, okay, how do houses, if you come to something with an open mind, you'll be like, okay, is it the house that's going up greater or is it the unit that's going up greater? And in my experience of 23 years of being an investor, probably the first 3 years, I was only buying houses. Houses only go, I had that opinion, right? I had that opinion. And I'm not saying units are the only thing to do or that they're the best investment or whatever, like, but be open to them. Because if I look back throughout my history of investing, I personally, at this point, own over 100, 120, 130 units, individual units, then blocks of units are separate to that. But individual units, I own a large portion of a portfolio in unit space. And stuff I was picking up 10 years ago at a $150,000 piece are now selling for $700,000. Let's use the Gold Coast, for example, right? Somewhere, I don't know, anywhere, Southport, right? Service Paradise. I was picking up houses for 500 grand. They might be worth 1.2, 1.3 million. Cool, they've doubled in a bit. But when I look at the price of a unit that was 150 or 200 grand, that's selling for $600,000-$700,000 now. So the house might have gone up and doubled or doubled and a half, but a unit could have tripled or almost quadrupled in value at the same time. But when you take a step further and you realize it's a bank's game that we're playing, you need to keep the bank happy to lend you more money, right? Because I got stuck at 7 houses. I couldn't get any more. And then I went and purchased units because that's what my servicing worked out. And I realized at that point that it's not what I want as a property. It's what the bank needs me to present at the table to be able to get more money from them to keep lending for me to reach my goals. So when I look at a house, those houses that were 500 now worth 1.2, 1.3. They were renting for 450, 500. Now they're renting for 700,000. That's cool. They're neutral cash flow today. But when I look at a unit that was 200 grand or 150 and it was renting for 300, 350 per week, it was neutral to slightly positive cash flow back in the day. But now that rent is $600 a week. So that property is now positive cash flow $300 a week. So instead of it waiting a decade for it to get to neutral, it was neutral from day one, and now it's positive a few $100 a week. Now you times that $300 by 10 properties, there's $3,000 a week. There's 150 grand a year passive income. One could live on that very easily. So work out, what does your strategy involve? And if you look at a business plan and look at this logically, you go, okay, well, this is what I need. I need 10 properties, need 5, need 50, whatever the case may be. How's the bank going to lend you for that amount? And work out your finance and your debt acquisition strategy, because one part of the strategy is to the asset, but the other part of the strategy is to the debt and all the resources needed for that and deposits. So if I look at the rent is one part as well, but if you've got a low entry price to get into that property, if you've got a 500 grand property or a 700 grand property and you get 50 grand equity out, cool, you get 50K out, but that's only, 10%, 5% of the actual property value. But if you've got a 200 grand property and you're getting 50 grand out of it, now you're getting 20% back. So you put in 50K, you get back 50K, you can move a lot faster and you can acquire a lot more quicker and capitalize on inflation. So just some things to look at. I think the second point is having the right team around you, right? So a lot of people will sit there and go, I'm going to buy in my backyard. I'm going to buy an investment property in the suburb I was born into, right? And is that the right thing? Does it fit in your acquisition strategy? Does it fit in line with the plan and your business plan for your success? Without having that as the initial part, then it's hard to, it's easily to get emotional attachment. Looking at the selection of the asset, should you be buying it yourself? If you're buying it yourself, what's your negotiation game like? What's the ability to, source areas and knowledge on those areas? How to deal with the agent? How to shake a few extra grand out of the real estate agent? Or do you use a professional? Do you use a buyer's agent, right? And for those of you that are listening or watching, a lot of people think, oh, Nathan makes cool videos, macroeconomics and all different things. What does he do? B.Invested was one of the first buyer's agents in the country. I started this business 17 years ago, and there was no such thing as a buyer's agent. People used to be like, what, you want me to pay you a money to find a property for me? And like, well, that's what we do, right? So if you go and use a buyer's agent, I guess the important part of choosing a buyer's agent, what makes a good buyer's agent versus a not so good buyer's agent. I think it's important. There's a wash of information out there today. There's so much knowledge. You can watch a TikTok, a video, Instagram, whatever, and see all these people that might appear pretty cool, pretty knowledgeable, all that. But what is their game? What is their background? What is their experience? And are they where you want to be in life yourself? Because if they can't get themselves there, how are they going to be able to get you to where you want to be? So being in the game as, one of the first buyer's agents in the country, and probably the first when it comes to investment grade sort of properties like this, I have special KPIs that I look at for the properties that I acquire, which are investment grade stock. So the main things are buying it below market value, having upside for capital growth, having a strong cash flow, buying below rebuild cost, and the serviceability of that location, being able to service for a much higher price. That means that growth could come. There's a wave of people probably in the last 5 years which have come out in the buyer's agency space, and they have a cool car, have a cool game, have a nice suit and tie on, or whatever the case may be. But what were they doing before? What is their portfolio looking like? Why do you choose them as a buyer's agent? And I think it's very important, because I see these new buyer's agents come in, but they don't have the knowledge base behind, building that wealth, right? And the things that I see as red flags in the marketplace is AI data-driven technology, right? Oh, we're an AI data point, data this, data that, AI this, AI that. If they're harping on about that, why don't you use ChatGPT and ask, hey, where's a good investment to go buy? Where's a good location? And just do it yourself and save yourself a fee, right? If that's the case. There's a few old school buyer's agents out there, like myself. They're very good. They've got lots of knowledge. For me, what a buyer's agent should be doing, right? And some people like their hand being held and having coffees and lattes. I ain't going to sit here and have a coffee and latte with a client, right? I don't need to, right? I need to get you the result. I don't do little TikTok videos of me dancing around the office, right? The thing that I see a buyer's agent should bring to the table is, one, the strategy to be able to help you, right? If they've been able to help other people, then they're able to help you, right? If you're the first one to get their goal, then they haven't done it beforehand. They're learning on you, right? But most importantly, I see a buyer's agent as being a trained negotiator, so a specialist in negotiation to get you to where you want to be. That's what you should be paying a buyer's agent for. You pay the buyer's agent to buy the property. You pay them X amount of dollars and they save you double or triple that in the value of the property. You pay 20 grand, you get 50 grand below market value, those sorts of things, right? So you want to make sure that they're a trained professional negotiator, because a lot of buyer's agents are not good at negotiation, right? I'm seeing that in the market. The second thing is their relationship with agents, right? Before AI, before you could just go into ChatGPT, hey, I don't even know how ChatGPT works, right? But I see people using it. I'm not a fan of it. But if you couldn't tell. But before tech came in like that, and it picks up data that's old, right? So there's two elements here. One is having the relationships with the real estate agents. Hey, this property, I get the calls from the agents before the properties go on the market. I see the properties on the market. I say, hey, agent, we're going to buy a property today. And they're like, cool. And they ring fence that property for me to make sure our clients get it and we get it on our terms because of them buying so many properties over the years. Looking at, identifying areas, right? A lot of these data-backed buyers agents are saying, hey, this area is a good area to buy in today because the prices have gone up 20% last year and 20% the year before. That's a big red flag for me, because I go into an area when the market is right at the bottom, right? I don't want to buy a property with the risk that's factored into the deal because you're buying it at the top, right? I was buying in the I'll just say Woodridge in the Brisbane area, right? The Mount Druitt of Brisbane, right? Whatever. Logan. I was buying properties there, 150 grand, 180 grand. I bought 5,000 of them in that market. And those properties have gone from 150 to $500,000-$600,000. A lot of these AI data-driven buyers agents, I notice it because I'll go into markets and I'll buy 500 properties this month or 200 properties next month, whatever the case may be. And stats can be manipulated from that. So the buyer's agents are using their data and is waking up old locations, right? And it's like, this thing hasn't done anything for 10 years. We buy everything for 200 grand. Suddenly there's nothing under 300 grand. You type it into the data, hey, where's an area that's booming? It shows this area is booming. It's gone from 200 grand to 300 grand and everyone's in and buys it at 300 grand. You're paying 50% more for the property, right? So you want to be in the market with the knowledge, right? Real knowledge, because once the data's out there, the day has come and gone, right? The market, if it shows it's had growth, well, the growth has already been had in that market. So you need to be careful with who you have on your team and, what advice they're giving you. If they're saying, yeah, I'll get you to retirement, I'll get you 20 properties, and they've only got 2 properties and their clients have all got 2 or 3 properties, well, then how are they going to, what is the way, what is their strategy? Let's hear it, right? Ask around. Important. I guess I've got a few little bullet points here. One is timing the market. So a lot of people out there go, I'm going to wait for the election to happen. I'm going to wait for interest rates to go up, or I'm going to wait for interest rates to come down. I'm going to wait until Christmas or the new year. I'm going to wait for this or wait for that. Problem is that there's always things moving. We're in a very liquid sort of market, and interest rates go up, interest rates go down. It just happens. You're going to buy a property, you're going to own it for 30 years, 40 years, 50 years, whatever. You're going to have different ups and downs and troughs throughout that period of time. But if you're waiting for interest rates to come down, what happens when interest rates go down 1%? That means that everyone's servicing goes up in value. So it means all of the competition in the market that may not have been able to service to buy a property at that point, when interest rates come down, they can service for a little bit more money. Puts more competition in the market. There's more urgency out there. FOMO kicks in. and people make silly decisions and the market start rising. So, trying to time the market. I'm always wanting to buy. Over the last 23 years, I've bought properties every single year. Some years I've bought more than what I have in other years, but it's been a collection over that period of time. And certainly when I started buying properties, I wasn't buying 20, 30, 40, 50 properties in a year. I was buying 1, 2, 3, and then it gradually grows as you've got more asset base, you've got more options and choices and abilities to be able to play out that game. I guess the fourth one we kind of touched on beforehand with the buyer's agents is trying to chase those hotspots that are out there. There's a lot of hype. People, when I see people get wrecked or they're about to get wrecked, I'll be sitting there and I'll go, where's the best area to invest? Oh, it must be this suburb here. It's the best area to invest. No, it's still in Australia in 2026. There's markets which I'd touch and there's markets that I wouldn't touch. And, I look at Townsville today, for example. I was buying in Townsville for 100 grand, 90 grand, 130 grand only 2 years ago, right? You can't buy in Townsville for under 400 grand now for a little shitty old, unit that's 40 years old. And you feel scared. You got to lock your doors as you drive down the street. I look at that and people will be like, oh, it's a great area, the prices are rising or whatever. It's like, hang on a second. That's too much of a risk because you're trying to get a hotspot. You want to be there when the market looks terrible. So I want to get them at 150 grand, not at $400,000. So, try not to be the hotspot. The hotspot will get you killed. I like buying in depressed markets personally, but I buy in every market, right? So if I look at, I'm just trying to think, back in 2025, the year that's gone, I've bought in every state in the country, every state and territory, basically, in the country. So there's still deals to be had. And I mean that for myself, for our clients, bought everywhere. But it's important to look at the value of the deal. What is the deal bringing to the table, and how's it going to help me get into my next deal? I'm not thinking about this deal that I buy today, right? If someone's got 100 grand, they can buy 2 properties. Who cares? 1 or 2. That's cool. That's locked in. What I'm looking at is property number 3 and property number 4. And how is property 1 and property 2 going to help me get to number 3 and to number 4? That's the crucial part there. So, yeah, it's important to, I guess, not look at the hotspot and look at the strategy and revert back. Have that plan, have that business plan, have a strategy to get you to where you want to be. Emotion always gets you killed. 5 is the emotional aspect. I wouldn't live in this area. I wouldn't live in this street. It must be a house. It mustn't be a unit. If it's a house, I could potentially add a granny flat, or maybe I could subdivide it one day. Hopefully I can sell it to a developer, whatever. Hopefully, maybe, potentially in one day is different to, hey, I'm making cash flow, I'm pulling equity out, I put 50K equity in, I pull 50 grand equity out next month, I can use that capital to go buy my next asset. The aim of the game is to collect the assets, generate wealth, generate cash flow, and see inflation do its thing. You want to see your rents increase, you want to see your asset base increase, collecting those assets for the portfolio. So emotion can come in 2 different formats. One is fear, so you're fearful of the world and scared of interest rates or politician or potential capital gains tax or whatever the case may be. Or it could be the other side of the emotion, which is the ego, and it's like, oh, I can go and buy 20 properties this year. So hey, hang on a fucking second, you can't. You can only buy 5. Let's focus on the first 5, and then once we get them sorted, we'll look at the next tranche to go through. So yeah, the emotion is where people get killed, no matter which way, whether it's fear or ego. Tying it back to the last 2 points that I have here, like point 6 and 7, is having the clear goals, which I said at the start, right? Like you need to know not just the goal of today. When you're buying an asset, you can look at the short term of, I'll buy a property, it'll go up. You buy lots of properties, they'll go up, right? But if you can only buy 1 or 2 properties, or you can buy 10 or 20 properties, I think about it, oh yeah, I bought 2 houses, 500 grand a piece, $1 million, right? Cool, you got 2 houses. But if you've tapped out your servicing, the properties don't do what they need to do, you can't get the equity out, you can't go get more lending, how are you going to get to 9, 10, 11, 20, and build the portfolio out? It's going to be much harder. So having that clarity in place, going, okay, this is what I need to achieve for the next stage, that's what you need to be focusing on. So being alert and like fluid in your journey is very crucial. If I sit here and say, hey, I'm going to go buy houses in Mount Druitt only for $150,000 a piece that rent for $350 a week, houses don't rent for $350 a week in Mount Druitt anymore. It's 2026. They're renting for $500 a week for a little shitty fibro. Houses in Mount Druitt haven't sold for under $800,000, $900,000 in 2026. So, for me to build out a portfolio, I could be sitting there hoping, wishing, praying, why not me, play victim, whatever the case may be. Or I can be like, okay, hang on a second. I can't, I've got 4 properties in the portfolio. I want to get to 10 properties. I can't do it back in Mount Druitt today. However, I found another market which is very similar attributes with the properties, the growth potential, etc., etc. I need to move over there. So it's just being fluid and going, okay, this isn't the only way, but roughly that's where we need to be. So yeah, having goals, but then being fluid to move left and right along the way. So on that note, I don't think I've really got any more notes for us to cover off on the day. Hopefully I've given you a tip or something that's gone, aha, right, I need to change something. If you need help on building out the strategy, you can hit us up at admin@B.Invested.com.au, 1300 367 925. Like and share and smash up that like button on here. The more that you can like the videos and comment on them, the more views that we get, and the more traction we can get to delivering better messages to you guys. Every Thursday, Google Play, Apple Play, Spotify, and YouTube. Thanks for watching. Have a great week. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.